Good morning, all. Welcome to today's morning market review. My name is Olabisi Olaleru. Mic check, please. If you can hear me, type audio in the chat. All right, thank you. So I guess the audio is clear enough. Let's exercise additional patience, additional 5 minutes for those that are having connection issues. In about 5 minutes, we'll kick off. So just exercise patience. All right, welcome back. For those of us that are just joining us, my name is Olabisi Olalere. I'll be the one facilitating today's meeting. Please, just as a confirmation, if you can still hear me, please kindly type audio in the chat. We're about to start. All right, so for anyone that is having any audio challenge, please kindly confirm that should be at your end. Check your mic, check your system or your phone settings so I can move along with us. All right, if you can see my screen also, please kindly confirm you can see my screen. I have the landing page, make daily profit, morning market review. Can see my screen if you can see my screen. All right, so let's move on. As I often do, anytime we're analyzing markets on any given day, we need to look at it from two different perspectives. We need to see what has happened, both fundamentally and using technical analysis. So let's just dive in. Let's move to Forex Factory, see what the week has looked like when it comes to fundamentals, and let's see what other fundamentals we're expecting for today. So keep in mind, based on the trades we're targeting for today. I'm on Forex Factory now. Someone type Forex. If you can see my screen, please type Forex. All right. Clearly, we can see the screen now. All right. Looking at what this week has like so far, you can see that there have been mixed news from the US. Starting from Monday, when we have the manufacturing PMI come out hugely positive at 1.2% extra. Then you have the ISM manufacturing PMI coming out negative, marginally lower than expected. Then also, we have the ISM manufacturing prices also not doing well. Hello? If the audio is still clear at your end, please someone type audio. I'm experiencing some interference. If you can hear me, please type audio. All right, good. We're still together. So as I was saying, there has been mixed for the US for this week, apart from all of the political tension in the US. So whatever it is that is pushing US right now is sentimentally heavy and huge, meaning price is not really going through by just the fundamentals and the technicals. Sentiment is high around this period. So for any trade you're having, let's be very smart enough to always protect ourselves in the course of those trades. So let's move over to the chart and let's check some technicals and see what price movement might be like for today or the remainder of the week. So I'm moving over to the chart now. I'm on the chart right now. If you can see my chart, someone should please type chart. If you can see my chart, right, good, we're together. This is the dollar index, GSD, USIDX, that are a measure of the strength of the dollar across a basket of currencies. This is one of the easiest way and most objective way of measuring the strength of the dollar by numbers. By numbers, based on what price is doing across board, we can see what the strength of dollar has been. And you realize from what we have here that since 3rd of June, you can see this landslide movement down that pulled the value of dollar down. And now dollar is going to rebounce back and is ranging within this particular portion here, as has been shown here. And this is not showing a clear path. It's about showing a build-up of an uptrend. I can see that right here again, it has broken one of the tenets of uptrend, where you're meant to have series of higher highs and higher lows. But right here, we have a lower low here and a lower high. Hence, you can see the confusion even on the strength of the dollar on its own. Another hint towards the strength of the dollar is the USD CHF. CHF being one of the weakest currencies, anytime the CHF pulls the dollar, then you know that something is wrong. Just as a clear view here, you can see USD CHF is down. I'm on USD CHF chart now. You can see USD CHF is down. It's showing that truthfully, sentiment is strong against the dollars. So now let's look through all of the charts individually and look at possible movements and what the trades will look like for today and what we can make out from today's market. We're on Euro USD now. I'm on Euro USD. Please take note. Euro USD chart. Let me zoom in slightly. You can see that price has been on an uptrend on the H4 and drilling down the H4 to your H1 in 30 minutes. You can see that price is in a range as it is here. So when we're looking at what situation could be here, we need to factor in possible points where price would break above or below. Because for every good trading strategy, please key to note this down. Every key strategy should show you three things. First off, the direction of trade. Second, your entry point, because it is not enough for you to know the direction of trade. If you enter at the wrong time, you might still be on a losing trade. Then finally, your exit point, which serves also as your risk management. Your exit point is both your take profit and your stop loss. Price has been on an uptrend, as you can see here. But at this point here, looking at this resistance and support level here, price is in a range as it is. So if you're looking for any trade in regards to what we have with Euro USD currently, you need to wait for this price rather, to break above this resistance level, as you can see on my chart. Let me zoom in slightly so that I can be able to pick it from your own end too. Looking at my crosshair here, this high here, there's a resistance above it by region with the upper bound at 1.08967. It's only when price breaks above this that you can buy on price continuing on an uptrend. And then note that a first easy take profit exit point is at the closest other resistance here, which marks up with this high here. Or for those of us that are conservatives, you can allow this price break above here first, then wait for a retest at this point. But if price sails down, then you have to wait for this up below here, lower bound of 1.08519 to be broken first. If that is not breached, you're not sure of entering into a short trade yet, because you need to be very, very keen that price can have a false breakout at times. So for those of us that are conservatives, allow that price level to be first, then wait for a retest before you can enter your trade. Because any other trade you're plunging in right now, you're not sure of direction because price is hanging in a balance, except for those of us that are scalpers, in which case you are targeting retracements at those support and resistance level I've outlined on Euro USD. Moving on, I'm moving on to USD CAD. Just as confirmation, hope that was not too fast. Hello, what is the speed rate? Is it okay? Should I maintain this or do I have to slow down a bit? If I'm fast, type fast. If the speed is okay, type okay, please. There's a mix of both. Okay, we're having more of okays. Well, let me reduce it a bit then. So moving on to USD CAD now. So please kindly switch your chart also so that I can see the same thing I'm seeing and follow through with this analysis. USD CAD, please kindly change your chart. On USD CAD, you see that price has been also on a downtrend. Looking at our H4 here, you can see it is quite steady on the downtrend. Drilling down also on our H1, you see the range, but the range is too wide a point. So let's narrow it down to see whether at the lesser level, we can still be able to pick a trend with this direction. Zooming in slightly. you can see that price has found a resting point on a proven support here. So on your USD card, price has gone too low. Price is to force its way back up. But every point in time that it has gone up, you can see that a verified support here resisted this price forging up. So what I'll tell you here is that for this USD card trade, before you can think any bearish or a short trade here, you have to wait for this proven support to be broken. And the lower bound of that particular support, as I have it here, is at 1.36630. So looking at what you have on this chart, that support level must be broken first. As I keep saying, if you're a conservative person, meaning you are not so prone to risk, wait for that particular level to be broken, then you set a limit above it, open for a retest. And for those of us that to a large extent can accommodate some level of risk, you can have a stop trade in this particular level I'm pointing out, so that you can look at this support here must first be broken before you can think of a bearish trade here. And for those of us that are scalpers and looking for retracement, you can also set a limit trade at this region, waiting for price to test it and pull back up a little, some small pips. And at the upper level here, as you can see, this is a verified distance, which is quite a distance from the current point here. So that is not even to be discussed right now. That's about 52 pips from the current price level. So the only two things you can look for here is price coming back to find a resting point on this support, where you'll now enter through, or allow it to break here. Then you can think of what? Price going downward. Looking at the closest other support level, based on the price formation you can see here, the closest take profit point for you is here, as outlined. Just look at your chart. If price breaks below here and you go short, your closest profit level is below here. That's about 37 pips. That's quite reasonable. You can kick off with that. Moving on, I'll be changing over now to AUD-USD. AUD-USD. I've moved to AUD-USD chart. Please do well to change your chart also to follow up on this. All right, on the AUD-USD chart also on H4, you can also see price has been on a trend. All of this supports the fact of what we've seen on the USIDX, the US dollar index, to show that price has been against the dollar, is not in favor of the dollar. Hence why AUD-USD has been rallying. But also note that price cannot just keep rallying or going in one direction. Price is always diagonal, zigzag formation moves. Yes, tending towards one direction more than the other, but alternating and fluctuating between up and down. So as we have here, price had gotten to a verified, it's your double verified resistance, as you can see here. Double verified resistance. Let me zoom in slightly again so I can see clearly from that end. It's got to this level here, double verified resistance, different test count, first time, second time, and price has been on down. Also, it's hitting on a verified support. So price has been in a range. Here it is. Sentiment has been against the dollar. Data have been mixed up. So it is difficult picking a clear path, because most times after technicals, what buttresses that strength and gives a landslide movement and increased volatility is an impetus from fundamentals. The fundamentals, as it's were, is so mixed that people cannot place a clear path. So in this case here, as price is ranging, for someone looking to make something out of this trade, look at the upper and the lower level places as retracement levels that you can set limit trades for once price there, or wait for those levels to be broken. And I don't see this happening this week. So if price should get to any of this upper or lower bound, just target a limit trade to retrace price in the opposite direction and pick some pips from there, and set your stop loss a little bit above those resistance and support levels. Say give or take 10-15 pips, a very tight one, and you'll be able to make something reasonable out of this also, if price does that fast enough in the course of the week, or even today also. USD CHF, we're drilling down. We've already shown this already, that price has been on the downtrend, and that CHF, being arguably the weakest currency, is a true test or a litmus test for the strength of the dollar. So this lets me know that the dollar has heavily been weakened. So looking at this now, let's see what the situation will be for any trade or possible trade on USD CHF. Drilling down to H1, you can see that price has found a resting point on this support here. And what you have here is also a rejection sign. This doji here, at this level here. Look at here, also is an engulfing bullish candle, which has totally retraced all of its value. This is what I'm saying. For those of us wondering, this is what we call candlestick pattern formation, which are ways to which some traders pick activities of price based on what they can see on the chart as another form of technical analysis. Let me measure it, and I like trying to point out. Here is a doji cross, which is a rejection sign. Also, look at this bullish formation here, indicative of the strength of the bulls that price is about to reverse, possibly. You can see this bullish formation here. There was a gap down from this bearish candle, and then look at this engulfing candle, encapsulates every of the activity in the previous time here. But here is the shocking part. Gradually, price covered back all of the price movement, as you can see here. That shows to let you know that the confidence in that buy is not that strong, because ideally, this formation should not have been followed by this total retracement back to all of this move. And now, it's also pulling back up. Hence, you can see why there's this confusion in the strength of the dollar. So as price is rallying back right now, if you're thinking of anything regarding USD CHF, since it's weak in comparison to other currencies, you might think of price going upward because price has really gone down. And also, as a rule, price does not stray too far from its moving average. So let's confirm that by loading moving average on this hour chart and see how far price is from the moving average. All right, price was initially far and it has rallied back to the moving average. So price is on top of the moving average and we're expecting a crossover anytime soon. Meaning for USD CHF, going back to the plain chart for clarity, for USD CHF, you should be targeting bullish trades. You should be thinking of going long. Just look for good entry points. You can look at the lesser time frame to target support and resistance level where price will break above before you can an entry level. Here is one here. There's a turncoat resistance on your 15 minutes time frame. And from what I can see here, set your chart to 15 minutes time frame. The closest point here, as you can see, even before this recent high here, is here. That's at this price level, 0.89354. At 0.89354. When price above here, that is when you can think of price going on an upward for USD CHF. All right, we've on a couple of currencies today. Let's see what gold has to offer for today. I've moved over to the gold chart. Please are still with me. Type gold. I've moved over to the gold chart. I've had a couple of questions regarding gold. I've moved over to the gold chart. If you're still with me on your gold chart, please type gold. All right, splendid. We're together. On our gold chart, you can see that price just broke out of a ranging point. From what you can see here, price has been ranging. Let me use this line here to outline it. Zooming in for better view. You can see that price was ranging for a while on gold and price has broken above that level and price retested it. Price is finding a rest on it. Hence, with the weakness in dollar based on sentiment, I see gold on the upside, at least for today. So just look for tenable entry points using either support resistance because price is already on a turncoat support. And the relevance of a turncoat support is, for those of us that don't know, a resistance and a support are opposite sides of a coin. Either is still part of the coin.
A support can become a resistance, and a resistance can also become a support depending on the position of price at that point in time. Hence, when a resistance is broken, it becomes a support to that same price when price is coming back to it. In this case here now, what you're seeing as a turncoat support here was the same resistance that was holding price over time. Price has broken it and price is now on it. A turncoat means twisting your coat inside out. So anytime you are looking for a possible retest level, a turncoat is a retest level that price goes and comes back to touch. So in this case, a price has come back to touch turncoat support, which is a good entry point right now for your gold trade because it has broken out of that range. So if you're looking at any trade on gold today, you should be looking on the upside because price is already about to kick off when it hits back on that line as I've outlined here. For those of you seeing my chart clearly, if you're not, you can always fall back to our YouTube to watch a review of this. So if you think I'm too fast or there's something I've said I didn't pick, please do well to check on our YouTube channel, go through the video again, you'll be able to pick all of this price level and areas outlined so that you can get a good entry point for your trades. All right, we've picked a couple of instruments now. We've talked on gold as well. Let me look at some of the questions that have been dropping and see which other instruments we can look at before we take some other questions and call it for today. All right, someone has a question here that you have your Abiodun Adebi, all right, you had your technicals done right and price was meant to be in favor of your trade because you made a buy based on the strength of the euro. But then subsequently along the line, fundamentals came, which you are aware of, and the price changed against you. Here it is. Let me break it down. There are three ways to analyze trades: technical analysis, fundamental analysis, sentimental analysis. As a rule of thumb, there's no verifiable data in support of this, but arguably, technical analysis takes about 70% of analysis because most analysts depend more on technicals because technical is more long-term and future-proof. Fundamental is more of a spike, at times irrational movement. But for the true institutional traders and professional traders, when fundamentals come out, it's not in the instant that they trade it. They analyze it and it towards the direction of what the analysis would be. So if I had already made a concrete analysis for an uptrend and a fundamental comes and backs it up, then I know that I'm in for a long haul. Price will go well in my favor. But if the fundamental comes out and goes against what I think by technicals, that means I have to start my recalibration of what the technicals will look like because the fundamentals are now letting me know that what the price has done that is giving me this inclination might totally not be true because something might have changed. Because for every technical person, we're using price as a basis for analysis. And when people trade sentimentally, it means it is more of impetus, sentiment, irrational, not much on verifiable thinking or data. If they based on this, their activity will also be shaded by price. So if the price I'm looking at has been skewed from irrationality, it also means that I may get the wrong result from it. What it means is if your data is wrong, your analysis will be wrong. So meaning if price in time past took account based on fundamentals and sentiment being very weak compared to fundamentals, it also means that whatever analysis I'm making based on that is not only taking cognizance of the rational one, it's also taking cognizance of the irrational one. And this can spook my analysis. That is why anytime you make a technical analysis and see fundamentals come out, it lets you know you need to revisit what you've done. Possibly you might have had a bias or some wrong assumptions because to every rules, laws created or principles, they are predicated on certain assumptions. Then you reanalyze again. That is why I would say before you start your trading day or week, look to see what the fundamentals will be like for that week or day so that you can know at what point in time your trade might be thrown out of direction. In which case, if the trade is already in your favor before the fundamental, you can do either of two things. Take your profits immediately or protect the profit you've made so far by moving your stop loss to your entry point or to the other side on the profiting side, hence the stop loss now acts as a take profit. Because that fundamental comes out, it may still shoot up price in your favor for higher profits. Then you can take way higher a profit or set trailing stop so as to follow this price and protect you in the course of that trade. If you're on a losing for fundamental, get to see or check what your risk preference or tolerance is. Set the level and put a stop loss there. So if the fundamental goes against you and now worsens your negative position on that trade, the stop loss cuts it off for you at a minimal level you can handle. But on the flip side, if it now luckily goes in your favor and fundamental pushes price in the opposite direction of your initial trade that was negative, it pushes you into profit and you can still make something out of that trade. I hope this resolves the issue of technicals, fundamentals, and placing trades and how you should be cautious. So let me see what else we have here. Someone just asked, you've been on a trade and you realize you have a negative value on your trade terminal indicated as swap. Swap is an overnight rate. Take, for instance, you have $1,000 in your pocket. You may not do anything with that $1,000 in a week or two, and you can realize changing it to Naira, the value might still have appreciated. That is the interest rate differential on the different currencies. So based on the currency pairs you're trading across board, swaps are charged as overnight rates. That is the prevailing interest rate of those particular instruments based on the individual interest of those currencies on their own. So at times it may be positive, at times it may be negative. It is not a function of how long you stay on a trade, but rather it is more of the trade staying overnight. Take, for instance, as an analogy, pardon me using this, please. If you lodge in a hotel, someone gets there 12 noon, got there 2 p.m., and someone got there 10 p.m. or 9 p.m. at night. They are still paying the same rate. And the checkout time is still going to be 12 noon the second day, because that is the policy by the hotel business. So same thing with swap. Once your trade stays overnight, you are charged that particular pips differential value, which shows as Naira or dollar to you, depending on the account you're using, as a function of your lot size. How can you know what swap is, whether positive or negative? You can go to your market watch, whatever instrument you're trading or about to trade on, right-click on that instrument, go to specification. On your specification, the total contract binding that particular instrument will be clearly denoted there. Scroll down. A little bit above where you have the time and session of that particular instrument, you will see swap long, swap short. That is an indication of what the value of swap is in that particular instrument you're about to trade on or you're trading on, so that you can know ahead of time whether this particular trade gives swap in my favor against me. Case in instance for Euro USD, buy is negative, sell is positive swap. If it is on commodities, that is known as rollover. Just that we can have several sections on your terminal, so it doesn't look too cumbersome. So it may still be displayed there. That is rollover. That is a change in contract value period of this instrument. So that is what swap is. This is in response to Olugbenga Babatunde. I think you now know what that is about. Please, for those of us that might have dropped the you need us to look at, I might just look at 2 more. Please drop them again, because you have quite a long chart here. So scrolling through, I might miss some. Please. We're looking at 2 other instruments right now. So just drop the 2 you think we should look at. And based on the numbers that we have, we'll decide on the 2 we're rounding off with. About equity and lots traded. Please. All right. RSI is an oscillating indicator, which is a leading indicator. Most times we separate or rather classify indicators into two major types: lagging indicators and leading indicators. Lagging indicators as the allow price is doing like your Bollinger Band, like your moving, the allowed price first. Then you have oscillators. Those are the leading indicators. These have some mathematical formulas or models to use to calibrate and calculate what a future price activity should be based on what price has done and what price is currently doing. So RSI falls into this oscillators group of indicators. The upper bound being 70, the upper limit, the lower bound being 30, the lower limit, as a range to know when price is in normal activity and when price is in abnormal range. Any level above 70 is taken to be that price has gone absurdly too high. Any level below 30 is taking that price has gone absurdly too low also. But please note, this is not enough to think, because people do this a lot, that when price just breaches or goes below 30, they just start buying. No, the fact that price is in the oversold region is not enough for you to buy. Also, the fact that price is in overbought region is not enough for you to sell, because in demand, which is what you have on trading, trading is about demand and supply. There's what we call the normal demand, we call abnormal demand. When there are odd situations, market might be irrational and go to the extreme. Take, for instance, in the time of extreme conditions, wars, crises, you realize that price keeps surging high and people don't care. People are still willing to buy those things at that price because they need them for survival, necessities. So at times, price can be in that way too. So what I often tell people is, if you're someone looking to use RSI for overbought and oversold, it is good to expand your limit higher and lower than the default level of 70 and 30 to accommodate for some, abstract situations, the extreme situations are. So you can change your upper bound from 70 to 80 and the lower bound from 30 to 20. So that's how RSI works. Then for the person asking about equity, Mr. or rather Oluwatosin, you're asking about equity and for you to be able to trade a standard lot. For you to trade a standard lot, the equity needed is a function majorly if it's currency. Okay, yes, you said it's on currency. Leverage matters. So it depends on which of the trading platform you're using, whether the XTrader or the MT4 or the MT4, even also MT5, because leverage differs on these platforms. So what I'll suggest you do is this: either you reach out to me personally later or your account manager, so that I can get, if I get this information from you, I can easily let you know what is required to trade a standard lot at that level. So please, Oluwato, reach out to your account manager, or at the end of this lecture, I'll give my phone number so I can reach out to me and let me know this information. If I know this information, it's now easier for me to be able to let you know what capital size you'll be able to trade a standard lot. GBPNZD, D40, have all GBPNZD, GBPNZD. Euro USD has been done. Please just try and watch this review back on our YouTube channel so that I can pick what we've spoken about Euro USD, so I can pick from there, please, so that we don't have to go back and miss out on the opportunity of analyzing one or two more. Mr. A1 or Mrs. A1, I've had this GBPNZD almost everywhere. All right, let me bring it out. Let me pull out GBPNZD. GBPNZD. All right, I've loaded the GBPNZD charts. Please, if you can still see the chart, I've just changed my chart. Kindly type chart. Let's analyze this. And someone also dropped yes on, we might look at that briefly. Then pass for the day. All right, chart. All right, you can see my chart. All right, splendid. All right, let's move on. GBP/NZD has been on a downtrend. Even though this is a weak support here, what I'm seeing here is tantamount to a build-up of a reversal. Hello, look at price is already rejected at the lower level here. But for you, I don't know what trade you have on GBP/NZD or you are targeting to. If you don't have a trade ongoing right now, that means you're waiting for price to break above this initial price level here, this recent high. For those of my charts, and more, for GBP/NZD, price here ranged downtrend is shown here, but price is now gradually going back up. So if price breaks above this resistance level, retests it, and comes above this triple test here, 1, 2, 3 here, then that is when you can look for an entry of price being on the upside for GBP/NZD. Price has gone down for too long a time and is looking for a reversal point. Let me even check to see on the divergence formation to see whether there's any formation for divergence here. All right, there's no formation for divergence. It's just normal price movement. So just wait for price to break above this high here and target a retest when price is coming back there. Because if you look at it here on this other plane chart, let me shade out what I'm saying. Currently, price is at a very strong resistance or support level. You can see that price was here before, as displayed here. Price came back, it held price up before price broke it. So if price can comfortably break where it is right now, and so as to get yourself from the possibility of a false breakout, then it's also good to give it a point of what? Confirmation before entry, where you are sure that at this point, if price goes above here, was sure that it will continue on the upside. Allow price break above this other recent high here. It breaks here, breaks the second one, then price is on a landslide up, price will rally. So that's the situation for GBP/NZD. For Mr. AI that has been asking. All right, somebody's asking, how do you mark your chart? No key points and key levels. There are two possibilities. First off, you can draw a line or you can draw a rectangular shape. Lines can pick exactly a point for you if you are concerned about a precise point. Shapes on the other side can pick a region or a zone for you, like I just did with this angle. And if it is drawn wrongly and you want to remove it, you can always right click on your chart, go to object list and delete what you don't want to see. Keep in mind that it arranges in sequential order, meaning the way at which you put them one after the other chronologically. Meaning if I draw, like in this case here, I drew this lower one before this second one. Hence, this second one will be lower on this particular list. If I delete it, you can see that that's the second one that is gone because it's the lower one. So if you have your object list, the most recent will be the last. So draw your shape to pick out region. Draw your line to pick out point. But if you want a price alert, you can also right-click your chart at around where you want the price to be. Go to trading, select alert. When you select alert, it will place an arrow Let me zoom in some more so that we can see. Can anyone see this arrow here? Please, on the chart. If you can see the arrow I'm pointing at on my chart, please type arrow. You can see arrow to the far right. There's an arrow here, thin dashed lines and an arrowhead to the far right. Anyone? Anyone? Okay, one person can see it. Who else? Where my cursor is rolling. Cursor is that my normal arrow I've been moving about, but there's this arrow now in red to the right. Anytime you right click and you go to trading and you click on alert, it will place an arrow at a level that you want the system to alert you for that price level. And you can edit it to put it at the price level you are looking for. Meaning, I've done my analysis. I'm waiting for an entry point or a trigger point. I don't want to set the trade ahead. I want to see it first. By the time that price gets there, I want to be sure that what I've analyzed is applicable. All right, someone said he or she cannot see the arrow. Let me do something. Let me magnify my screen. All right, I've magnified my screen now. Let me go and point at the arrow again and let's see if you can see it now. For everyone, can we see the arrow now? If you can see arrow, please. For those that have not seen it, can you see where the arrow is now? Can you see arrow? I'm hovering on it. Please type arrow, not yes. I don't know what yes might be an answer to. So I want to see arrow so I can be sure we are seeing the same thing and we are responding to the same question. Yes, arrow. That arrow now has been indicated there. It has been set there as a trap. So that when price gets there, your system will alert you. So meaning I might be doing something in my office, in my store, in my shop, at home. And while doing those other things, my system is on. And I want to be alerted when price gets to that particular level. This is in response to the person that asked, how can I mark out points? This is a way to mark out points. And once you have set that arrow, you can also edit the arrow to suit your. Once you double click, right click on it and click on edit, it will bring you the arrow dialog box. And I believe you still be seeing my screen and you can see it here. You can activate it to have sound so that it notifies you with a sound. It can even notify by sending you an email. You can set how long the alert will take. How many seconds should it take when alerting you? Is it 10 seconds? Is it 20 seconds? Is it 1 minute? Is it 3 minutes? How long should it ring when giving you this notice? The essence of this is so that it's just like when you have your alarm set on your phone or your clock. It starts to get your attention to a need at a particular point in time. So all of these are ways to which you can highlight or mark your chart. Time is fast spent. We just have about 8 minutes to round up. Risk management is too large for me to just bump into right now. Please, BoomTech, I'll suggest you reach out to your account manager. We have a dedicated slide, an online lecture to this if you are not in any of the cities where we have our training centers and our branches. But if you're in any of the cities where we have centers and our branches, we have an intermediate class dedicated to all of this: risk management, money management, Fibonacci expansion, all of these higher intermediate level teachings in trading. So please reach out to your account manager to get the schedule of the closest branch to you to know how you can join those classes as well. Let me see what I can round up with here today. All right, US 100 has been here severally too. Let's just have a look at that. All right, let me load the chart for US 100. All right, here we go, US 100. I've changed my chart to US 100 now. First off, based on how price has rallied here, let me see whether there's any divergence in view. All right. This was what I was trying to explain when I was talking about RSI. Please, for the Ma or the Sir that asked earlier on about the RSI and the application, and I was talking about overbought, oversold. This is the clear situation now. On my screen here is the upper bound of 70 and the lower bound of 30. You can see that price has broken above the 70 mark. And price broke above the 70 mark somewhere here. Imagine here. You would have expected the price will sell. Look at now. Sell was short-lived. And price went back up this high. Excess of 292 pips against. So that's why I said that it's not in for you to see price when in the overbought region on your RSI for you to just sell immediately. Because there might be some other impact that will hold the price in that other direction. Sentiment, fundamental keeps it there. But if it's purely technical, price would have fallen. So that is why you don't plunge into that. So if you have or you're using RSI, always look for something else like a key resistance point if price is at overbought that can help you protect yourself so you can set a tight stop loss and allow price fall down. If it's on the lower part at the oversold level, look at a key support level as a reconfirmation of price going back up. Or if you have your Fibonacci also, you can use that. All of this lets you know. The way you have your US 100 as it is right now, price is looking for a point to turn back. Because price has rallied, let's go to H for higher time frame to see. The price has gone past the recent high. And on D1, same is still applicable. The price has rallied excessively. And when that happens, investors, smart traders are already looking for possible reversal. Because price, like I said, in time past, does not stay flat in one direction. And anytime price is also too far from its moving average, it will find a way, a resting point. Let me just change the view to see what the moving average is indicating here. You can see that price was initially very far from the moving average, but price has stalled. Meaning price was just staying, waiting for moving average to come closer. And right now, price is ranging. Price as it is right now on your US 100 is looking for every reason to come down. So at least you should be looking for a downturn on your US 100 in the recent time right now. And as a confirmation to this, you can check with your US 30 because the US indices often move in the same direction. The difference is their steepness and how fast they react to that move. Let me load US 30 to support this claim. Hello, I'm on US 30 chart. If you can still hear me, please, someone should type audio. If you can hear me, type audio. If you can still hear me, please type audio. All right. So you see that on your US 30 already, price is already pointing down. Can you see? On US price is already coming down. But US 100 price is still hanging up there. So that gives you a hint ahead that price is about to go down. Because the US 30 is a subset of the US 100. And it will take a faster reaction as compared to the US 100. So hence, for your US 100, you should be looking on the downside. This is just a minute to 9. I have taken so many questions here today. Apologies, and please pardon me if I've not been able to pick yours because as I was scrolling through, I might have erroneously overlooked yours and cannot handle all of the questions in just one lecture as we have it here today. We'll just have an hour to tell what the day was going to look like for trade and hint ourselves on some other techniques or strategy. So please, If you didn't hear any part of this lecture or this money market review, and you feel the need to want to revisit it, please kindly visit our YouTube channel. It's already there. It was streamed live, so you can always rewatch, list, pick those points, pick those learnings, and then be able to do something with this and make something for yourself today and direction for the week coming, depending on how price moves. You have some of these prices and these levels to look out for the remainder of the week. Thank you for joining today's lecture. My name is Olabisi Olaleru. I'll drop number here on the chat so that if you have any other challenge, you can reach out or reach out to account manager, telling them to give you my contact also. Thank you for joining us today. Do have a lovely trading day and remainder of the week. Bye. I remain Olabisi Olaleru. Yes, someone is indicating that I didn't start 8 exactly. So how come I'm ending by 8? The challenge is this, sir. Why I often give that additional 5 couple of minutes before starting is that I know that a couple of persons would have issues of connection, because as at when I set up at 8, we had only 30 persons. And right now, we have upward of 120 persons. So imagine if I had started immediately at that time, several persons that are coming back to ask Euro USD gold would have missed out on almost everything. So that 5 minutes differential will not make much difference, please. So do try and understand my reason is to accommodate several other persons that might have been network challenges. That is the reason why, sir. So apologies. I've dropped the number already, or you can reach out to your account manager to get this. Thank you. Have a lovely day. Bye.